A very good evening. You're watching the budget special of India Ascent. It's a 1 hour long show where we get you all that matters in India's growth journey. But first up, the headlines. Prime Minister Modi makes a strong pitch for more SOPs for one of India's growth engines, the middle class. Finance Minister Nirmala Sitharaman all set to present her 8th consecutive budget. We decode what could be in her buy khata.
बात से कह सकता हूं कि 2047 जब आजादी के 100 साल होंगे, विकसित भारत का जो संकल्प देश ने लिया है, ये बजट सत्र, ये बजट एक नया विश्वास पैदा करेगा।
Benchmark indices end in the green on the eve of budget, anticipating a pro-growth budget. Will the Finance Minister give tax SOPs to investors in the form of cuts in capital gains tax? Economic survey projects growth in the range of 6.3 to 6.8% for the next financial year, recommends deregulation by the government and exhorts corporates swimming in excess profits to take responsibility to create jobs. And from jobs to providing more avenues for skill upgrades to possible tax breaks, how can Finance Minister reach out to the middle class? We find out. Viewers, the big story on the show, the economic scenario for India, the world's fastest growing economy. The economic survey table today projects growth in the coming year to be in the range of 6.3 to 6.8%, while inflation remains a concern. This comes amidst rising concerns for restrictive trade practices globally. How much could they impact India's growth trajectory? We will find out. But first, listen in to Chief Economic Advisor Dr. V. Anantha Nageshwaran explaining why he feels 6.3 to 6.8% will be India's growth journey in the coming year.
The era of globalization, faster and larger movement of trade and goods and services and investments is behind us. And there is a huge presence of a single country, a phenomena that we have not seen in a very long time, at least since World War II. So given this, naturally, we have to raise the game for a new playing field. The game has to rely on domestic drivers of growth. So what are those domestic drivers of growth? We have to raise our game on domestic growth. And how do we do that? There are 4 dimensions to it. One is deregulation for growth, augmenting internal capacities for growth, the role of the private sector in nation building, and doing energy transition the Indian way. Deregulation is not just about ease of doing business, it is a pathway to employment generation. And naturally, we also know that many states impose a high markup on electricity costs supplied to businesses compared to other non-businesses. And whereas in countries like Vietnam and Bangladesh, particularly in Vietnam, which we look up to, it is the other way around in terms of being our next important competitive country. They have the opposite problem, which is that the cost of electricity supplied to industries is on the lowest side there compared to what we have in India.
All right, viewers, let's take some of those data points one by one, and I'll explain why they so matter to us as far as India's growth is concerned. First is the growth number, the headline number. At nearly $4 trillion, India is the world's 5th largest economy. It is poised to overtake Japan to be the 4th largest by next year. But that's not enough, because India's potential is more. And the economic survey shows that the Indian economy is on a steady growth path, with growth projected still at sub 7%. And that is important to note given the fact that there are global headwinds. Let's now come to the macro health of the Indian economy. Whether it's the current account deficit, whether it's the core inflation numbers, the overall macro picture for India indicates that its fiscal math, that is, how much does it have and how much can it spend, and the overall financial health for it to be able to also ensure that those it needs to provide subsidized food, subsidized healthcare is able to do so because the financial health is on sure footing. If Donald Trump's administration manages to bring down crude prices, something that President Trump has spoken about, then the move will allow India more room for better fiscal management, given the fact that we import over 85% of our total oil needs. Now let's come to FDI, the one figure that probably more attention needs to be paid to. The foreign direct investment number, remember, has been very important for us. The world has turned more protectionist. There is now a strengthening dollar and there's a weaker rupee, and that impacts us because it impacts the investments that investors make into India. In the last decade, this FDI has been the cornerstone of India's economic strategy. It's been an important source of capital. It's almost been a catalyst for building capacity in India, for job creation. FDI inflows, in fact, topped $81 billion in FY21 because India was the most attractive investment destination. It still remains so, but FDI inflows have fallen. In fact, they've actually fallen significantly in the last 1 year. And restoring investor confidence will put India right at the top when it comes to attracting global capital. And viewers, on India Ascent, the focus is very clear. What we will get to how we will get to our economic fate, what will help our ascent. And the answer to that is essentially very simple in 3 clear words. One is we need to be a manufacturing powerhouse. We need to tap into a demographic dividend by focusing on skills to leverage technology and make the best use of favorable external factors like a global push to realign supply chains away from China. It's up to us to really become the China +1 manufacturing hub. And we speak about manufacturing. India's future growth journey to a large extent is linked to its ability to turbocharge its manufacturing ecosystem. For long, the aspiration has been to be a manufacturing hub. And the prospects, the positives that are coming in from the PLI scheme give hope that the goal to achieve that 25% of GDP coming from manufacturing by 2030 is now a very achievable target. Add to it the tailwinds. A US-China trade war will put India at a huge advantageous position. A tailwind that could in fact put India at the very center of a global supply chain. And this report tells you why Indian manufacturing, which grew at almost 10% last year, can do much, much more. Take a look.
From semiconductors to mobile phones, the aspiration to make in India has never been stronger. And there are reasons to believe India's manufacturing sector is standing at an inflection point, one that will make the transformation that policymakers have long desired. For one, the government's PLI scheme has been a success. The PLI scheme spans 14 critical sectors and has an outlay of 1.97 lakh crore rupees. The focus is on sectors that foster innovation and propel India toward its manufacturing goals and reduce dependence on imports. The projected outcome looks promising. A Goldman Sachs report suggests PLI scheme could generate over 450 billion in revenues in the next 5 to 6 years. This has raised the industry's expectation that the government may double down on its PLI outlay. The electronics sector has been a star performer for the PLI scheme. Smartphone giant Apple clocked over 1 lakh crore rupees in iPhone exports from India in 2024, up 42% from the previous year. Domestic production surged nearly 46%. Beyond electronics, which has attracted the lion's share in funds, the response so far has been a mixed bag, with several companies unable to meet their PLI targets, which may force the government to make tweaks. But the government is aware that it's the semiconductor dream that could truly put India on the manufacturing highway. The sector ticks all the right boxes: propensity to create large-scale employment, provide India the opportunity to align with global supply chains, and make the best use of its tech talent.
Lead out, lead out. Viewers, before I come to the top voice, let me tell you that the China +1 trend in global supply chains will get a major fillip under President Trump. In fact, he could even push the Quad to be more than just about soft power and disaster management. It could be about creating alternate supply chains, a move that will benefit Indian industry. The budget should work on land, labor and capital for big-ticket manufacturing to take off. Plus, promoting Make in India in tandem with artificial intelligence and technology will create a thriving innovation ecosystem that will propel manufacturing forward. And that's exactly what we're going to put forth to my guests joining me on this broadcast. The first top voice on the show, which is Jim Rogers. He's a global financial investor joining me from Singapore. Mr. Rogers, good to have you on the show, and thank you for speaking to NDTV.
I am delighted to be here. I am a fan of India, even more so now than I was before.
And let me then start by asking you, what is the reason that you are so optimistic on India, and what do you think could be the single biggest catalyst for growth in India going forward?
Well, India has an astonishing population of smart, educated people, but now it seems to me that the government, that Delhi, seems to understand that it's good for people to be successful. For many decades, Delhi said, yes, we want you to be successful, but they didn't really mean it. Now, I think that Delhi understands success is good, prosperity is good, and it's okay if people get rich. It's very exciting. The change in India is very exciting.
And the change that is coming in terms of mindsets, how do you see that translating in terms of reforms? What would be your top 2 or 3 reforms that you would want the government to bring about?
Well, India for centuries, for certainly decades, has had a lot of smart, educated, hardworking people. But in my view, the government never really wanted people to be too successful. They didn't like for people to be rich. I think that now Delhi understands people have to be successful. It's good for the country, and it's good for people to get rich, because if they get rich, they're more successful, and India's better off. This is a very exciting change. I've been investing in India for decades. I never saw this real change in New Delhi before. They said it, but they didn't mean it. Now I think they mean it.
Indeed, there is a positive change as far as mindsets are concerned. Wealth creators are being respected, almost celebrated. But then let me ask you this, that in your assessment, how do you think India should tap into A, its large skilled workforce, and B, how it should bring in technology for the next wave of growth?
Well, technology, India has been and will be even more in the future a major leader in the technology, because you have a lot of people in India who understand, who know how technology works. In fact, India often is the one who leads in the technology. So it's all coming together, miss. It's very exciting. For me, as an outside investor, as an international investor, it's very exciting to see the change that I think is happening in the mindset in India.
What about the restricted trade practices that one is seeing and one is in fact anticipating? Policymakers are anticipating. Economic survey mentioned that as well in terms of growing protectionist trends. How do you see that impacting India?
Do not worry. It will take time. India has over 1 billion people, and a lot of the people in Delhi, still have the old way of thinking. But I think I see the change taking place in the mindset that the people in Delhi now understand, and they know things have to be different. In my view, it's very exciting, and it seems to be real. For the first time in my life, Delhi seems to be real, and the mindset seems to be really changing.
Final question, Mr. Rogers. Before I let you go, I have to ask you your outlook on Indian commodities as well as the Indian rupee.
As well as Indian what?
Indian rupee, the currency.
Oh my gosh, you want a hot tip? Well, I do too. I want to know whether to buy the rupee. I am more optimistic about shares in India now. I do not own the rupee, but obviously, if and when I buy shares, I will be buying the rupee as well. And it all has to come together. Delhi, I think Delhi understands the whole mindset has to change, but everything has to change. The currency, the stock market, everything. It will be very exciting. And the bureaucracy. You know, India has had one of the biggest bureaucracies in the world. If that changes too, oh my, India will be wildly exciting. So change the bureaucracy too.
Indeed, government efficiency is being spoken about around the world, and I'm glad you mentioned that as well. Mr. Rogers, always a pleasure for you to give your views on the Indian economy, and I wish I had a hot tip that would have also made me a billionaire, if not at least a millionaire. Thanks so much for joining me today.
It's very exciting. I hope to see you in Delhi. Bye-bye.
All right, second wide angle on the show. Globalized world. Trade is getting increasingly protectionist. We just heard our top voice mentioning that. Let's talk about what are India's options when trade and global trade talks are getting insular. They're being led by the US. They're being led by President Trump's administration. How can India ensure that its interests are protected against President Trump and the larger protectionist instinct that's taking over trade talks around the world? This report has that answer. Economic policy is more than just how countries impose tariffs on goods they import. But with President Trump, it's probably the most important major economic decision. And trade policy, though limited in its scope in the budget, is set to be a key priority for the government. In fact, to set the tone for how India may placate the Trump regime, which has set tariffs as its go-to template for all foreign policy-related issues, simplification of custom duty structure could be on the cards. Think tank Global Trade Research Initiative has made a case for reducing the number of tariff slabs from over 40 to just 5, a move that will allow India to negotiate better with Trump 2.0. Since custom duties now account for less than 10% of gross tax revenues, the government has fiscal room to cut them, allowing the government to not view them only as a source of revenue, but to be used in sectors where domestic industry truly needs the safeguards. While the US is India's largest trading partner, FTAs with other regions like ASEAN will benefit India and reshape domestic industry. Rationalizing concessional duty imports under these FTAs could further help reduce the inflow of cheaper imports and support local industries. Trade policy is more than just Harley-Davidsons. It's about ensuring domestic industry rises to become world champions, but also creating a pragmatic trade arrangement. It's time to ride. A very short break, but we come back on the other side of that break to talk more about the Indian startup ecosystem. We are the third largest. How do we go about becoming the largest startup ecosystem, and will budget provide that answer? We come back on that after this very short break. Stay with us. Welcome back. You're watching India Ascent, the inside story on the show this week. The startup ecosystem of India. It's been one of the biggest success stories. It's the third largest startup hub in the world. But as bootstrap founders hope to give wings to their entrepreneurial instincts, more needs to be done. For global venture capital and private equity investors, India is an attractive market. But but there can be more. And this report tells you what all can aid India's ascent to be the world's largest startup hub. Startups succeed when the state gets out of the way, a universal mantra that also resonates in India's startup ecosystem. And the state's instinct to expand its overreach, either in terms of taxes or regulations, must be curbed. Like all businesses, startups need clarity and certainty. Given their limited administrative apparatus, probably even more. The top demands for startups in this budget are to remove regulatory roadblocks, create a single window clearance, ensuring founders don't have to run around for multiple approvals, and reduce compliance commitments, besides providing more tax breaks for startups. Scrapping the draconian angel tax has provided a huge relief to startups, but more could be done. Artificial intelligence, machine learning, future areas of dominance that will require support today. Leveraging the power of startups will get India to play a major role in future technology supply chains, and the budget must make a push to strengthen the same. Quick take segment on the show. The union budget is the government's intent on how it plans to raise money and spend it. And every major group has expectations. And let's get you that. First up, India's middle class, that's now powering its growth story to a large extent, is hoping for tax cuts. With personal income taxes contributing more to direct taxes than corporate taxes, there's a strong case for tax cuts for the middle class. It will boost consumer spending as well as savings. With government employees set to get hikes as per the latest pay commission, the salaried middle class hopes for a tax reprieve. The middle class is also expecting more focus on job creation and skill development. Corporates have three major expectations from the budget: continued investment by the government in infrastructure, focus on streamlining regulatory framework for ease of doing business, and bring in reforms related to labor codes in line with other parts of the world. But the government also has expectations from corporates that they will now start spending and invest and ensure that they take part in job creation. Agriculture forms a very crucial part of India's workforce, and farmers form a very important grouping. They expect the budget to continue support programs, in fact provide minimum support price for all agricultural produce. There are expectations of a possible revamp in post-harvest infrastructure, strengthening of farmer produce organizations, and deployment of Manrega workforce for agricultural related work. All right, we slip into a very short break. We come back on the other side with global experts to decode what will aid India's ascent ahead of Budget 2025. Stay with us. Welcome back. You're watching India Ascents with me, Gaurie Dwivedi. We've got a power-packed lineup of guests, market experts, economists, to really decode what all India should be focused on to really get on to that growth highway, and also specifics, whether it is the Indian rupee, whether it's crude, whether it's our larger macro picture, what all we need to really focus on to ensure that our target of being a 7 trillion, 10 trillion economy actually gets fulfilled ahead of schedule, if not on time. All right, before I get in, our guests this evening, Peter Cardillo, Manish Maheshwari, William Buter, as well as Abhinav Mishra, I want to quickly tell our viewers the big questions that we are going to pose to them. The key questions that matter when you talk about the budget. First up, what are the headwinds when it comes to India's growth? The specific areas that we need to watch out for, whether it's the trade factor, whether it's internal issues, whether it's related to FDI, what are those? We're going to decode that. The second key question that we're going to put forth to our panelists is, India to get on the 10% growth highway, what does it need? Because that's the kind of growth we need to really get on to being the Viksit Bharat dream that the Prime Minister has spoken about and we all all aim to be, which is a developed economy on our 100th anniversary of independence. The next key question, let's put that out for our viewers, which is how will India navigate the Trump tariff threat? Remember, that's the key issue that's being talked about again, not because it's just about a US-India issue, but because it sets the tone for how India will be navigating protectionist tendencies. The other key question, the last one that we're going to put out, is external factors. How much will they affect growth? Whether, as I said, it's going to be crude, whether it could be factors related to uncertainty around tensions, wars, all that. How much will that impact our growth is the question we're going to get. Okay, let's get in Peter Cardlow, who's the chief market economist of Spartan Capital, joining me from New York in just a bit. Manish Maheshwari, who used to be at Twitter, but now he's a Mason Fellow at Harvard University. Mr. William, who's a former professor of economics and chief economist at Citi and EBRD. And I have Abhinav Mishra joining me from Singapore, another expert of markets, someone who understands what will it take for the Indian economy to get onto that highway. Gentlemen, thanks so much for speaking to me on India Ascent. And in fact, Mr. William, let me start with you, sir, which is that in terms of your key priorities, the budget has highlighted some. There have been some headwinds also that have been pointed out. According to you, what should be the key priorities for the government to really focus on when it comes to ensuring that Indian growth continues to be on the kind of target that they hope for?
Well, the budget is important here, but more important than the budget is continued deregulation of the Indian economy. That's a major obstacle, over-regulation still, despite the significant improvements in the last 4 years that holds back growth. The budget itself should aim at sustainability. The public sector, general government, debt to GDP ratio at 85% is too high. And so the government has to selectively focus on capital expenditure, especially infrastructure, and on imposing taxes in a way that does least to discourage entrepreneurship and activity. Broad-based taxes are best for this.
Okay. I'm glad you mentioned about deregulation, because that's one of the first and key themes of the economic survey today. India's chief economic advisor made a very strong pitch for deregulation. In fact, he said, get out of the way. That's essentially what the mantra should be. The state's role should be limited when it comes to aiding growth rather than playing a larger role that could be in the way of Indian businesses. This is what the CEA has said, and let's hope how much of that translates into government action, because it's not just about the budget, but there's also, of course, a larger government framework that has to sort of aid that. Mr. Mishra, you're joining us from Singapore. You're someone, we've spoken before as well about Indian equities, Indian markets, Indian investors. What are investors really looking out for? Because one may say that the FDI numbers have fallen in the last couple of quarters, but the other side to it is India is still the world's fastest growing economy. If you aren't here, where are you really going to go? Unmute yourself, sir.
Thank you. Can you hear me now?
Yes.
Yes, thank you for the meal. So, and you are right. So India continues to be the fastest growing economy, but that goes without saying that the current budget session comes at the backdrop of slowing growth, but as well as, more importantly, slowing domestic demand, which contributes about close to 50% of the Indian GDP. And that has been largely the challenge in the recent times, of also depreciating rupee. Global uncertainty, is only combining the tension. If you look into this budget, while government hands are tied due to the slowdown in overall revenue, and the government revenue has been kind of slowing, but they have, maintained their target on the fiscal deficit. And I think the finance minister in July's speech mentioned about 4.5% target for March next year, and 4.9%, this year itself. And that has been, and maintaining that means that the government spending has been reducing over the course of last couple of quarters compared to what they had anticipated. And even the current targets are being met largely due to a lot of stimulus with the high dividends that RBI kind of contributed to the economy. Now, while we are looking at the budget that is coming out tomorrow, very soon we are also going to hear from RBI on the monetary policy guidance next week.
Yes.
Which is also interesting, given the monetary policy challenges also continue. So the rupee has been at the record low against the US dollar. And if you look at while the inflation has been quite in control within the thresholds of RBI, they will struggle to reduce the interest rate significantly, in order to manage.
That's an important point you're making, just for the benefit of our viewers, because, to keep it simple, the fact is what will come out tomorrow is how government plans to raise money and spend money. And what Mr. Mishra is also talking about right now is that what will the RBI do when it comes to interest rates, given the fact that inflation still remains a concern. Economic survey also points about it, that inflation will remain a concern. And monetary policy can be a discussion, but I want to come back to the budget, given that we're speaking on the eve of it. Mr. Peter Pacadillo, can you hear me now, sir?
Yes, I can hear you.
Great. I was going to ask you in terms of your one key expectation from the Indian budget tomorrow. What would that be? Would it be infrastructure? Would it be skills? Would it be on better taxation? What would that be?
Well, it would be infrastructure and education at all levels. Those are the two key drivers of growth that the central government has significant impact on. I would hope that we would see significant reallocation of resources from other unproductive activities to infrastructure and education at all levels, and getting the female labor force educated at the same level as the male labor force would be another important step.
All right, before I slip into a short break, let me get in a quick word from Manish Maheshwari as well. Manish, last year, the budget laid a lot of emphasis on skills, something that we expect to continue this year as well, along with usage of technology, because that's really going to be the gateway to future growth and unlocking future growth potential for India. Do you share my optimism?
Oh, first of all, thank you for having me on the show. My personal view is that, yes, investment in skill doesn't go waste. I think the question would be, are you investing in the right skills? And what we have seen in the last 1 to 2 years is that clearly many of the skills that were seen as important may not be as important. For example, the coding skills or the basic copywriting skills, those could be done by AI. I think what would be more important would be skills that are not replaceable. I think skills that require a bit more human creativity, that require human interaction. And also, advancement in AI has also opened new sectors that could require a lot of skills. For example, agriculture can be done better now with precision farming. Healthcare can be improved as well with better diagnostic and telemedicine. The same happens to education, the new ways to deliver education as well. So the question then becomes, are we looking at the right skill set as the whole global landscape in terms of the future of work is also going to change big time in the coming few years? So that would be very important for people to look at and also invest in the right areas.
That's an important point you made. Of course, you've got to invest in technology of the future, because that's the only way you're going to be part of the tech growth story. I'm going to slip into a very short break, come back on the other side, talk more about the 10% growth highway that we at India Ascent have been talking about for a while now. How do we get there? And most importantly, the key parameters to watch out for tomorrow as well. Stay with us in this special broadcast. Welcome back. You're watching a special budget edition of India Ascent. And the question I want to now put forth to our panelists is, how much will AI be a catalyst when it comes to India's growth? And I think the person who can answer this best is Manish Maheshwari. Go ahead, Manish, talk to us about the importance of AI and how much of a catalyst it could be for us.
So it would be a major catalyst, right? I mean, not just in India, I would say globally. So I'll tell you a couple of areas, in fact, two big areas where it would create an impact. One would be it resets the playing field for everyone. I mean, all the work, all the skills we thought was valuable may not remain as valuable now, given that many of the things would be done by, AI, and also more importantly now, agentic AI, which would sort of also be able to do your work in the way agents used to do. Now, the question then becomes, where do you then focus on? I think clearly we will have to then think about as we have to move up from the monotonous or the repetitive work, we can think about now like more creative work or things that were not possible before. We will have the time and the capacity to focus on those things. So that's one area. Also, it also means that many vertical specific applications will come up, which will use the foundational models, and that will then change the game in respective areas. Like I can think about, like, say, education delivery can be very different, like how skills are taught, how you do education can be enhanced through AI. The same can happen with healthcare.
Yes.
There can be better diagnostic. You can think about other things. So that will completely change the way we think about work, we think about future. And for a country like India, it also allows us to now rethink many of the programs and policies, because our programs and policies were framed in, say, pre-2022 era, where we were not aware of the developments in AI.
Yes.
There's also a debate about what should the government role be. I think my view there is that government should create an enabling environment, in the sense that they should encourage work in this area, but
Yes.
they should also reduce the regulations around it, right? I mean, and I think and also ensure a thriving entrepreneurial ecosystem, because many of the work will come out that entrepreneurial community. And as we saw with DeepSeek in China, it didn't come out of the state effort. It came out from a private hedge fund. So my view is that if you let the innovation happen and create the right enabling environment, you attract the right talent, and then the magic will start happening over time, right? I mean, so that's one.
Okay.
India also has a very interesting role as one of the leaders in Global South to sort of lead many of these changes. So I'm surely hoping that this would be another moment where we will leapfrog to the next level of delivery and
That's an
performance.
important point you made.
At an
That's an
individual
important
level,
point you made in terms
yeah.
of the leadership on a Global South level as well for India. Let me now turn attention to the other aspect of the budget and the budget-making exercise. We spoke at length about the opportunities that lie, but there are also certain specific areas, particularly like crude, like energy as a basket as a whole. We import over 80%, almost 85% of our needs, and global price changes impact us. Abhinav Mishra, how do you read that, given the uncertainties that remain, the fact that there are sanctions on Russian oil, Donald Trump's his view on crude is unpredictable at best. How do we protect our interests first and foremost?
I think you're right. So India still kind of imports above 80% of its crude oil requirements, also about 6% of its natural gas requirements. And that is only going to continue. So with the needs and the growth of Indian economy, I think on an 5 to 6% growth is what we are seeing. We're looking at about 5 million barrels per day requirement by 2030. At the same time, India continues to be a strategic partner for US, and that is not changing. If anything, what President Trump has said since his comeback as US president is to drill more oil. And if anything, what's good for India is, while the currency has seen some depreciation against the strong dollar, the crude oil prices have remained largely stable. Now, there might be some pressures with regard to its oil imports from economies like Russia, but then India can always diversify its oil imports including from US markets, and focusing a lot more on these. Obviously, it has to come at the competitive pricing. I believe India has managed overall its relationships with global counterparts quite well, and continue to do so going forward as well.
All right, William, let me then bring you in on the one thing, or which is almost like a collective national aspiration, which is our semiconductor aspiration. A lot of investment has been made in the last couple of quarters. Government's intent is very clear. There's been global interest as well. How do you see that playing along in the backdrop of a US-China chip war? Because that could be the kind of tailwind that could really propel our chip ambitions.
No, it's clearly true that the competition and rivalry between the US and China will end up benefiting India as a destination of foreign direct investment of the kind of high-tech industries that used to invest in China. And I don't think that there's much risk of India being declared a country that high tech cannot be exported to by the US. So I think India is well set up to grow its share in the IT and the AI sector. For AI, it's very important that even if you don't contribute to the development of the next stage of AI, the use of AI as existing AI as an input in industrial production across the board will be massive. So I think India is well set up. I think provided the government deregulates the entry and expansion, diversification of businesses and firms, India is well set up to become an IT leader in the years to come.
Okay. All right. I'm afraid that's all the time we have in this edition. And thank you so much, Manish, William, Peter Kudlow, and Abhinav Mishra for speaking to me ahead of what could be a game-changing budget, because many see this could really be like the 1991 budget. We need to now change our gear. We need to get onto that high growth trajectory. The answer to that, of course, lies in that red by khata of Finance Minister Nirmala Sitharaman. Thank you so much for watching this special edition of India Ascent.